Okay guys, what's up? Today we're going to talk about a completely new pattern that I've been trading for a while. I think I've went over it and I think I've talked about it just a little bit, but I haven't like fully went into detail about it, I guess. Um, and I'm not going to go, yeah, whatever. But I'm not going to finish that sentence. But today's pattern is this gap down pattern. As you can see, has a huge, I mean, these are technically candles, but it just fell completely. So I consider it still a gap down, but whatever. See, Snap had an actual gap down, and we're going to use it too as the example. AMD is the one that I played, and basically gap downs fail most of the time. I think it was like over 75% of the time when is what they do. They did all the research and everything else, tracked it, but again, they fail. That's the main point. We're going to go off of Snap here. So, how to play these is in my course now. I'm actually, that's going to be uploaded today into the course, an extra part of it, because I actually I've been doing it enough now that I want to confirm it as a strategy, of course. Other people have already did it, but this is mine. And it's doing this again today. So again, gap down. It's been up a couple days, 1 day, 2 days, and now gap down, and then it's pretty much ready to fail. Is how I'm basically going to say that. So you guys can probably figure it out on your own how the gap down works within red days, green days, stuff like that. But it's very simple. Just basically, if it's a gap down, you wait for it to run up a little bit at least, because it is going to come up a little bit at least, and then, or if it doesn't, well, dang. But usually they come up a little bit and you short it. But again, in order to short, you have to have a $2,000, what's it called, where you can basically borrow money in it. Account. I use E-Trade. TD Ameritrade doesn't seem to have a ton of shares to short, but today I shorted AMD was my play. But Snap is a better example. I think it was just a little bit higher price, so I chose the one that was lower. But you can see this gap down, pops back up, fades, and then right at the market open, pops back up, fails, has another little pop, and then fails. And again, they have a bunch of little pops, it seems like, but they do originally fail, and they don't. I mean, in order for this thing to go green, and I think to have a real spike, it's got to get back up here, and that's quite a bit of ways. So, simple gap down pattern is what I traded today. If you guys really want me to go into more detail about it, I put a new way for you guys to see the course on it. So I think you only have to pay $39 in a month, and you get it. And then you can cancel that subscription whenever you want, I guess, realistically. But again, the link for the course will be below. If you guys want to get my watch list, we have a couple people that saw these things move and they hit them. So I get emails every day saying, "Hey, thanks for the picks." But down below, I'm not a financial advisor. Once again, I have to cover that. I do not have my degree in this. This is what I do for a living, and it makes money. So with that being said, thank you guys all for watching. I want to keep this video really short. Please smash that thumbs up button, and I will see you guys in tomorrow's video.